Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be looking at the 50th Commitments of Traders report of this year. And as we always do, we shall start the analysis with the largest changes in commercials positions. Sorry for my voice, I caught a cold, still in it at the end, but it does affect my voice, so apologies over there. So let's start off with the sugar, where we have a 36% change in commercials positions, 35 in large speculators. Huge changes this week. One of the largest changes in the past 1 year. It is, of course, a bearish COT change signal coming after a rally that has been going on since October. So the change signal suggests we could see a bit of a decline happening early next week. If we move on to the 5-year chart, you can also see that we had that beautiful bullish COT Extreme back in October, pushing the market a bit higher. Now we've reached a relative bearish extreme, which of course is not that large yet. You can see on this 5-year chart examples from 2012, 2011, when we had much greater extremes. So those levels are of course still pretty far away. Nevertheless, in relative terms, this can be considered a bit of a bearish signal. Moving on to the copper market, we have a 21% change over there in commercials, a bit larger than average. Not necessarily the largest change in the past 1 year. Again, we can consider this a bearish COT change signal, meaning that early next week we could see the price action that we've witnessed on Friday to continue, meaning a bit of a decline. Moving on to the 5-year chart, you can see that we've been moving away from bullish extreme levels in the past couple of weeks, month, far away from any bearish levels yet. So we'll see how that develops in the next couple of weeks. Coffee is our next market with a 17% change, a bit larger than average, but nothing too unusual. Again, pointing downwards. Due to correlation between soft markets, we may expect this market to decline as well. We had that 36% change in sugar. Don't forget about that. So we'll see how that turns out in coffee. Moving on to the 5-year chart, we have a more extreme case. There's a bearish COT extreme that is 156 report extreme in case of commercials and 157 report extreme in case of large speculators. Now, of course, this could easily become larger in the next couple of weeks. We've seen examples of higher extremes in the past. The one I'm showing you from November of 2016 is a great example of that. But it is large, and you can see this example from July of this year, which was a relative bearish extreme that put an end to this rally over here. And prices have gone much higher since October. By the way, that was a bullish COT extreme situation in the market. Now we have moved away from those levels, and we've witnessing this bearish picture from the COT report. So both the COT change signal and the extreme suggest that we may see lower prices coming in coffee. Moving on to large speculator COT extreme, we still have the Euro Japanese yen pair on top of our list with a all-time COT extreme in large speculators. Now don't forget, I've mentioned this to you last week. We have a much shorter history of COT data here, going back to 2017. Nevertheless, it is an extreme, suggesting we could see higher prices actually, because this is a bullish COT extreme. But because of the short history, I would not give that much an emphasis on that signal. So we might as well just see what happens to this market, or there's another possibility. You may actually analyze the Euro futures market and the Japanese futures market separately and come to a conclusion whether or not it's advisable to consider a trade over here. Moving on to platinum, we have a 171 report extreme in large speculators and in commercials as well. This is, of course, a bearish COT extreme. There's no question about that. Here are some examples when we had bearish COT extremes in the past. So this is suggesting we could easily see a decline coming in platinum in the next couple of weeks or month. Coffee, we talked about that. We're going to jump over that, and the last market for this review will be soybean oil with 115 report extreme and large speculators. The same exact extreme can be witnessed in commercials. Large, but definitely can grow to even greater levels. The example from 2016 shows you how big of an extreme we can witness in the soybean oil market. So it is a bearish COT extreme signal suggesting we could see an end to this rally. But of course, caution is advised. This could easily continue on for a couple more weeks, month maybe. And while that happens, we would easily see commercials and large speculators increasing their net long and net short positions toward all-time extreme levels. So that would be, of course, a more clear picture that we have a situation where we can easily expect a major shift in the trend. So that was all for this review. Of course, this is a very short and fast analysis of markets. There are many other markets to analyze. Of course, newer COT report types that you could look at, other data types if you want. You can do a more in-depth and detailed COT analysis by looking at multiple report change. You can analyze the COT index, the move index, check the long-term trend indicator, volume and open interest analysis. I believe is something very important in in really analyzing strength and weaknesses in the market. So there's a lot that we offer here at COT Base. I hope you will give it a try if you haven't yet done so. I appreciate your attention. Thank you very much for being with me. Have a great weekend. Take care. Goodbye.